Good afternoon, everyone. Welcome to Analysts Insights. On this program, we are discussing our local capital markets, investing, and what you need to know if you're an investor. So, to get us started today, I'm joined by my colleague Rufaro. Welcome to the show, Rufaro.
Thank you for having me, Ranga.
Thank you. There's a lot to discuss, and we have missed almost like 2-3 weeks of developments. You know, Zim is never short of drama. Yeah, so I think we'll talk more about some of those. But before we do that, maybe I'll just take you through some of the key highlights that you should expect. In fact, that happened in the last 5 days of trading. So the last 5 days of trading, we've seen actually the market, the local stock exchange moving, recording some big gains, and obviously gains that are attached to what is happening elsewhere in the economy, especially around the foreign exchange market. So you'd see that the Zimbabwe the all-share index was up 12%, and the blue chip indices, which is the top 10 and the top 15, were up by between 9.5 and 12%. And then obviously big numbers also in mid cap stocks and small cap. And when you compare that with what's happening on the exchange rate, you're seeing that the power market rate actually during that period was sliding from 5,200 against $1 to 8,200, and at the same time the auction rate moved from 3,600 to just under 6,000 in during that 5-day period. So on to our markets. In terms of trading, the big trades are still going into Delta, Econet, CBZ, and for the week they were going into Delta about 8.1 billion, Econet at 3, and CBZ, Masimba, and NMB with trades between 1.1 and 1.8. So there is quite some activity. So when you look at the other market, which is the Victoria Falls Exchange, you see that trading remains quite limited. Meaningful trades were in score for the week, about $81,000 worth of trades exchanged hands, and Simbisa had about just under 35,000 trades. The rest of the Victoria Falls Exchange listed companies are seeing very little trading, with the likes of Nut Foods only recording less than $20 of trades for the whole week. I think that's an issue that we'll discuss with Rufaro here, but okay, what needs to be done. Then also looking at how the auction rate and the power rate have been performing in the last week, you could see that both rates are spiking. And I've already alluded to the fact that the power rate is around 8,500, while the current auction rate is just under 6,000. So the pressure is actually coming mostly from the current side, and it's also reflected on the Zimbabwe Stock Exchange in terms of how the all-share index is actually moving. And one peculiar thing about our local market is it's actually driven less by fundamentals of the businesses, but more needs to preserve value, and the fear that if you keep holding on to the local currency, you are most likely to lose some value. So for the week, the major movers, FBC, CBZ, FMP, were the major movers, and then the shakers, Star Africa, Delta, and FML. FBC, they're up 101% after an announcement that they'd actually agreed a transaction has been agreed for them to take over the local Stanchart business. So there's an M&A transaction that is happening there. CBZ, they still have a transaction in place where there's a merger between them and FML. Others are saying maybe ZB will also come into play. So I think M&A has been the major driver of the movements on the market. When you look at the picture in terms of the market capitalization, in as much as the market has actually gone up, you are seeing a situation where the market remains very tiny. There's very little value that's on the market right now. If you are looking at the fact that the likes of Delta has got a market capitalization of $612 million US. So that's the entire value of the business. Econet 320 million and CBZ 215. To try and put it into its proper context, some would know that Delta at its peak was valued at 1.6 billion. That was around 2013. And what's surprising is right now, in terms of its performance, it's actually showing record numbers that are much bigger than even numbers that we saw in 2013. So in particular, that business, the performance is actually at record high, but the valuations are still very much constrained. So this is the picture from the graph. You'd see the two graphs of Delta and Econet by way of market capitalization. This is where we are at the current. You see the numbers are quite small relative to the peak periods, for example 2013 for Delta, and for a good measure some of the statistics that you would want to look at. So unless you are looking at those statistics, maybe at this point I'll then get Rufaro to make a comment. So what do you make of what we are seeing on the market, both the exchange rate side and the ZSE side, and those numbers that I've just shown about the market capitalization, where for a Delta you've got a 612, and from the table on the screen right now you see a peak number for 1,728,000,000 USD as market cap. What do you make of what's happening on our markets, both foreign currency and foreign exchange and the stock market?
So I think on the foreign currency market, the devaluation of the Zim dollar is always a function of money supply. Okay. It's the supply-demand equation. I don't see significant changes on the US dollar side of that equation. I see significant changes on the Zim dollar side, where we simply have excessive money supply growth driving that. And unfortunately, we can't build any useful models, to forecast what's happening with money supply growth, because firstly, I think the last numbers that we have for money supply released by the Reserve Bank were March numbers, and they don't give guidance, so we have no idea what's happening in money supply. I mean, they say the same thing all the time, that they're going to keep liquidity tight, that they're going to control money supply, but the reality on the ground, when you actually review the official numbers to the extent that they're available, is that you have this massive growth. And I think that if you overlay money supply growth with the exchange rate, the two move in tandem. So, what we've seen is actually quite extraordinary over the last 6 weeks, because normally the rate runs for 2-3 weeks and then it stabilizes and slows down. But this has been really a massive movement from about 2,000 to 8.5. It's unprecedented, since November 2017, such a massive movement. So clearly something has changed in terms of money supply growth, or maybe the market has overshot the mark. There's just a lot of panic, and eventually cooler heads will prevail and the rate will pull back. It remains to be seen. As far as the market is concerned, on the ZSE side, I think the performance of the ZSE doesn't track money supply as much as it used to. I think some of this money that comes into the system doesn't end up on the ZSE because of the regulatory risk on the ZSE. So some of the recipients of these Zim dollars are not placing it on the ZSE. So that, I think, explains some of the lower valuations for the things like Delta. It's not so much that the market believes Delta's worth, only a third of what it was at its peak, but I just think that there's not enough money looking for a home on the ZSE. And then also on the sell side of Delta, I think a lot of the sales, when the institutions are offloading shares on the ZSE, they are distressed sales. These are not, in my opinion, sales where the seller has made an assessment that the stock is overvalued and it makes sense to sell it at this level. I think all the sellers on the ZSE have pressure to raise some dollars for one reason or the other, and those are the stocks in their portfolio that have liquidity, and they have to sell. They're price takers. Whereas in normal markets, typically when they're selling pressure, it's because you have a difference of opinion where the seller believes that the stock is overvalued, there's better value elsewhere, and the buyer is on the opposite side of the equation. Whereas in Zim, I think there's that distortion that by far, for the most part, the selling is pressure. It's a distressed seller. So you'll find that these valuations tend to be subdued.
Yes, so when you look at those valuations that you just discussed, it's a third, for example, Delta being a third of its peak. And yet, every now and then, whenever the market is on a rally, we have got these trading halts that happen because of the ZSE regulations in trying to cap the price movements. What do you make of that? Is that the right way to do what needs to happen?
Yeah, so the circuit breakers system for the ZSE doesn't make sense in the context of hyperinflation. If you look at the developed world, they don't have circuit breakers for individual stocks, because what can happen is you can wake up. So, for example, over the last few months, you had a bank in the US called Silicon Valley Bank that had solvency issues, and the stock price came off more than 90%. If that company was listed in Zimbabwe, it would not have been able to fall that much so quickly, because there's a circuit breaker limit for every stock. But if there is an event, new information that justifies a stock coming off 50, 60, 70%, it should be allowed to come off in one trading session by such a significant margin. Likewise, if there's good news that warrants a stock, so again, if you look at global markets, over the last couple of months, Nvidia, the chip maker, issued some fantastic results, and in one trading session, the share price went up more than 24%. And again, if that company was listed on the Zimbabwe Stock Exchange, it would not have been able to move up 24% in one trading session because of the 10% circuit breaker limit. And then if you look at it from a market-wide perspective, the New York Stock Exchange or the Nasdaq, really, unless the whole market comes off, in a material way, there is no circuit breaker that will kick in and halt trading. So I think in the context of hyperinflation, the regulations in terms of the circuit breaker limits and for individual stocks and for the market as a whole were behind the curve. But the ZSE announced they've changed the bands, so we are not having daily trading halts anymore, and I think that's progressive. And I think that a more comprehensive review of these limits is in order to align us more with global best practice.
And I've seen that recently, this week actually, the market has sort of cooled off a little bit. Why is that happening? What's the news coming, and what's really is driving that slowdown in activity?
So I think it's two things. I think number one, money supply probably has slowed down, and the portion of that money supply that was ending up on the ZSE is also affected. So the amount of money out actually chasing shares has slowed down. And I also think because the market has moved up so much, just from a Zim dollar perspective, somebody who's looking at it, there is a temptation to do some profit taking. Although unless you bought your shares more than 270 days ago, you're going to get hit with a massive 40% capital gain. So it's, not everybody's in a position to actually take profits and benefit from the movement that we've seen over the last 6 weeks.
And maybe just taking our discussion to the macros. So there was the statement from the Minister of Finance around duties that they have to be paid in custom duty, that it has to be paid in Zim dollars, and all these efforts that they are trying to do. How do you see them? How do you rate their capacity, or are they able to do something to research the Zim dollar? How much more time does the Zim dollar have? And those efforts, are they going to be game changing?
Yeah, look, I don't think that faith and confidence in the Zim dollar can be restored in the short term. I think to the extent that we're still going to be using the Zim dollar at all, it's a function of the issue of the Zim dollar, and to what extent do they show or not show discipline in terms of how much they increase money supply. Already, I believe the big retailers and their suppliers have lost a lot of money from this rate movement, to the extent that they were selling any of their stock in Zim dollars. And if the rate keeps moving at this precipitous rate for another few weeks, I think most of the big corporate retailers and consumer-facing businesses would rather shut down than to continue to sell stock in Zim dollars. So it's really up to the issuer. I can't tell whether we'll still be using Zim dollars in 3 months or 6 months or this time next year. It's a function of how the rate moves. If it moves aggressively for a sustained period of time, then we'll just wake up like we did in 2008 with most players in the economy saying, you know what, this is too hard, this is too difficult, I cannot trade in Zim dollars.
And yet the other analysts who think that in the next coming weeks we're going to see a huge shortage of Zim dollars, because obviously there's the quarterly payment dates coming for taxes, and also the fact that the Treasury has been mopping up liquidity from the market. And what do you make of that? Do you see that being having a bigger impact on a long-term basis on the Zim dollar?
So we have seen the currency pull back, and we have seen tight liquidity in Zim dollars from time to time, but it's always temporary. It's always short-lived. So the long-term graph of the Zim dollar is going in one way. It squiggles sometimes, so sometimes it will dip and pull back. That's not unusual. That may happen again this time, but I don't think it changes the outlook, the medium to long-term outlook of the Zim dollar.
And so another issue that's topical right now is on the shortages. So basic commodities are actually disappearing from the shelves, especially in major retail chains. What do you make of that? Should we brace for massive shortages, or there is more a reallocation of those products from the big retailers to elsewhere?
I think the challenge that the big retailers have, to the extent that they sell things in Zim dollars, is that when the rate moves against them, like it has aggressively over the last 6 weeks, they do not have the capital to replace that stock. And that's one of the challenges when you have a managed or controlled exchange rate that does not reflect fair value of the local currency. So if this happens, if this keeps happening, we will find shortages in the major retailers that sell things in Zim dollars, because they won't be able to replace the stock. I'm actually amazed that they traded non-stop throughout this period. I would have thought that some of them would have chosen to close their doors for a week or two to figure out where the rate will settle, so that they can price better and they can decide, they can ensure that they still have inventory. So I think they've taken significant hits. The extent of that is only going to come clear over the next few weeks. But for sure, if we continue to see precipitous fall of the Zim dollar, and the large retailers sell in Zim dollars, there are going to be shortages because what inflation does is it destroys capital to those selling inventory in Zim dollars, especially this kind of very rapid devaluation. So I think it's a very real possibility that we're going to see significant shortages if the rate continues to fall at this rate.
Yeah, it's very interesting views there because the major product lines actually disappearing on a increasing basis, but most of those products you tend then to find them on the streets, at the tuck shops, for the simple reason that the tuck shops are actually paying suppliers in USD money, and so what's happening probably with the suppliers are really not excited to be supplying a big chain that wants to pay Zim dollars maybe 3-4 weeks from now because of what's happening to the rate, and so anyway, before maybe I just want to get your remarks on this as we close the show on the transaction FBC buying Stanchart. What do you make of it?
Look, I think it's a sad day for our economy because Stanchart is one of the oldest banks in Zimbabwe. It's been here for more than 100 years, and them exiting this market is basically a indictment of the Zimbabwean economy because if you look at elsewhere where they are, like in Zambia, for example, they not only have many branches over there, they operate from 8 in the morning to 8 p.m. They're open throughout the weekend. And by the time they've exited Zimbabwe, they only had 2 branches left, one in Bulawayo and one in Harare. So in as much as we, as a country, has been making the statement that Zimbabwe is open for business, the foreign investors that are actually, the proof of the pudding, like Stanchart, they are voting with their feet. They're saying, it's too hard to do business here, and they're exiting. So I think, it's it shouldn't make us actually reflect in terms from an economic policy standpoint. Say, what are we getting wrong? Why are these multinational banks, choosing to leave? A few years ago, Barclays also exited, and Barclays had been in Zimbabwe for more than 100 years as well. So we need to perhaps interrogate the decision making of these big multinationals that understand Zimbabwe very well. Why are they choosing to leave? And what can we do differently so that other multinationals don't make that choice, and we, instead of having an exodus, we actually have these guys coming through into the country to make investments.
Yeah, so it's sad because, like, when you look at it, it's in the last 5 years we've lost Stanchart, we've lost Barclays, and it looks like the relationship between the authorities and the big corporates like Econet, like Insco, like Old Mutual is probably not at the very best. And those could be very good ambassadors selling the Zim a dream if there's anything like that. So it's a very sad situation. Anyway, thank you so much, Rufaro, for those sentiments. And to our viewers, we want to hear from you. If you agree, disagree on the issue that we've discussed, what do you think should happen? And to the extent that you have got money, where would you put your dollar into in Zimbabwe? Otherwise, thank you so much for watching this show, and see you next time. Bye-bye for now.
Cheers.